What's up, guys? Welcome back to another video. Beautiful day today. I want to share with you kind of like my thought process behind this trade idea. Today is 6th of September. It's a Friday, and the news we had non-farm payroll and FOMC at 10, FOMC speaking at 10, and that is my time. That is why I tried to take a trade right before 10 o'clock hits, so that guy does not affect our trading. So very beautiful day today. So the news came out at 7:30 my time, which is non-farm payroll, and we left the 2 weeks, one right here and one down there. So I don't want to take any trade unless we take, of course, one wick out and then go to the other side. And this is exactly what happened. The price came, started and did a wick up and down here, and then we pushed up to take that high buy side liquidity and creating at the same time what? Let me see here if I can get the brush. So brush here to create a buy side of the curve here, and this was the smart money reversal, and then going down to create a sell side of the curve. And it was a beautiful trade, to be honest. But here is the thing, guys: when should you identify the sell side of the curve that is going to start happening? And this is what I want to kind of like talk about. This is a trade that I took live on 4 accounts right here. This is my P&L, and I'll show you my execution. I did have it recorded here with me, so I'll show you that in a second. But I want to, of course, explain to you my thought process behind why did I decide to short from right here. So on the 15 minutes, because we don't need to go any higher than that, we did leave 15 minutes bullish fair value gap here, and this is pretty tricky here because, of course, you cannot do that sell side of the curve unless you can't confirm that this is the sell side of the curve unless we break this bullish 15 minutes fair value gap. And we did exactly do that right here. And then the price gave a discount up here to retrace to that 0.5 retracement. So right here, and it was a beautiful sale altogether. It was a really good trade, and this is the news wick, and I had a higher conviction that we're going to this data wick down here, and because this is what usually happens when we have a news that creates wick like this. And if you did not watch my previous video about how you can have higher conviction targeting that news wick, you can watch it. I can link it on the right corner of the screen. You can go watch it. It's pretty good video that explains why and how you can target those news data wick, and it works pretty much 80 to 70% of the times, and it's pretty good, of course, when it aligns to the narrative and the bigger time frame, like 15 minutes or so. So right here, this was the smart money reversal, and this is the smart money reversal because we also had right here between this high and this high, we had SMT, and that was it for me. It gave it away. We had SMT right here, so this is where the smart money reversal happened, right here between this high and this high on ES. And it's a beautiful smart money reversal here started, and then we give a bearish fair value gap that on the small time frame, that will be a small fair value gap like for the 30 seconds, because I was going back and forth between the 30 seconds and the 1 minute fair value gap, and we kind of fell through. This is the price on the 1 minute here. That's the fair value gap that was holding the price up, right? So right here, this one right here was holding the price up. On the 2 minutes, I'm pretty sure it's better right here. So on the 2 minutes here, it was holding the price up from this wick right here, and we did retrace a little bit to that bearish 30 seconds fair value gap, and then we fell through. And when we fell through, we absolutely destroyed all of this. The reason why I did not like to enter the short from here is because of two things. Because I'm trading live account and I'm trying to be conservative, because I really had a bad month that I'm going to share with you guys in the next video. I'm gonna review all of my August performance and my P&L for my August performance, and I was really having a bad month overall, or kind of average, but it's fine. I tried to be patient and conservative and picky with my trades, and this is what it got me: a perfect trade setup that I basically banked 85 and 75 cents price movement, and it's basically 1 to 3. I did size down a little bit because the stop loss was big, and I did not know if we're gonna go and retrace deeper in those fair value gaps or not, or the inversion fair value gaps on this side. But what it gave it away to me that this is a sell side of the curve now is because we absolutely demolished and disrespected those fair value gaps. So to me, that's a disrespect. We're pretty much moving to the downside now, and this is a sell side of the curve. Also, we kind of ran through that 50% equilibrium on the sell side of the curve, so that to me gives it away that this is the sell side of the curve for sure. And I did not want to chase or get in any FOMO trades down here, because I know that the price will come back and retrace to that 50% equilibrium line on the sell side of the curve. Once that happened, I had two bullish fair value gaps here created on the 1 minute, and to me that was a bit tricky, because of course, if you want to get in early, that would be the first fair value gap. But if you don't have conviction, if you don't know the bias, if you don't know the narrative, if you don't have higher conviction that we're going to that news wick low, then this is not a really a good play. And even the price can support that level here and support the price higher to go even deeper retracement to the top here. That's why I wanted to wait last second before we run quickly to that data low. So I waited for those two to break, and I took my entry right here, and I moved it to break even because we did not basically violate this wick and take that sell side liquidity, and I felt like we might go ahead and retrace deeper to this upper fair value gap or inversion fair value gap, the top one. So I put it at break even, and I got stopped out at break even, and then I got into the same trade again, and I honestly should not have moved it to break even so quickly, but of course that was the retracement, and I saw that retracement. We did violate those two fair value gaps, and we lift right here because it's not gonna be like when you see it in the video, it's gonna look like a random point that I entered from, but I waited for the retracement to that inversion fair value gap, and at the same time this order block, bearish order block, that price, that candle like tapped it and then inversed and went down, pushed the price down. I immediately got in here short, and as you can see, this is a 15 seconds chart. So 1 2 3 4 5 15 seconds chart, and I was out of the trade. Beautiful trade entry. I'll show you right now my actual execution. So I just wanted to first explain why I had higher conviction that this was the sell side of the curve and there was no other way that we're going up again. I waited for the retracement to happen on the 1 minute. I waited for the invalidation of the bullish ideas because we had two bullish fair value gaps here. So I waited. That's my equilibrium line. I waited, and it was a beautiful trade. I was pretty satisfied and happy of myself because I really had a bad month in August, towards the end of it, of course. And I will explain to you guys what happened and all of that in the next video of my August performance, so I can talk a little bit more about it, and I'm pretty sure you will learn a lot from it. So right here with the 1 minute after it closes, I turn down my leverage here because I usually trade with 6. I turned it down 2 micros down, so to be 4, so I can have a higher place or higher room for my stop loss because the stop loss was like about $30. So of course you don't want to over leverage, because right here guys, I want to mention something here. So if you had if I had the leverage to be 6 here, let me actually go to the chart. It would be easier to see that. Let me see how much did the price move to kind of retrace. So I got in here, right? So from here to that wick is, I don't know why is it not working well. So from this wick to this right here, that's $20 already. So the price already moved the $20. So if you don't know what I'm talking about, it's basically right here. So I entered here on this line, and the price retraced to this high, right? Was the highest that it retraced. And from this point to this point, it's $20.75. So let me show you kind of a quick example why I turned down my leverage. So here's 6 contracts that I usually trade with, right? And here is $20 of a stop loss. So my personal daily loss, guys, is $200. So keep that in mind. And since it's a $200 stop loss or personal daily loss, I can't go more than basically $17 of a stop loss, right? So that's why I turned my leverage down, because I did recognize that this could be a deeper retracement to the top of the inversion fair value gap, that top one. And I just, instead of blowing all my account, right, because I had higher conviction and I didn't want to get stopped out and losing day and being a red day, in meanwhile this could have been a winning trade just like it is, and I captured $500, which is pretty awesome with 4 micros. I mean, the price already moved $84, guys, so this is huge. So with 4 contracts micros, I was allowed to have a stop loss of $25, and this is why calculating risk is pretty important, guys. And I do have free calculators, so you can calculate your own risk. You can find it on my channel. It's a video, and the calculator is free. So back to the video here. So that was the reason why I turned down my 6 contracts to 4 contracts. Pretty smart move. Pretty proud of myself for that decision, and not sticking to my 6 contracts, because I did recognize that stop loss is needed. A bigger stop loss is needed, and I cannot be disacknowledging that. I was checking here my Discord, because I did post this on the Discord, and I think there's another guy taking the same trade. Apparently he might have watched my Newsweek video, and it's pretty good. So right here, guys, as you can see, I got stopped out at profit, basically, not break even, but it's considered to be break even. But I had higher conviction, and I know that we are going down to the Newsweek, and right there, as you saw, after the candle confirmed that, look, respecting the bearish order block and switching direction here to go lower, immediately jumped back in it. I know that is already like what, from 08 to here, 84. That's basically almost $20 of a move. I could have made a little bit more money if I had stuck with my idea and not putting my stop loss at break even a little bit early. But you gotta trust in your strategy, and you gotta protect yourself, because you never know. Okay, but as soon as I got in, stop loss moved to break even, because we took that initial low that I wanted, and there you go. Price kept pushing and pushing and pushing, and instantly, maybe less than a minute, guys, and I was out of the trade. I put the picture in for the Discord, and I said that I got out of the position here, and that was it. The rest is history, guys. I'm really proud of myself. Stay tuned for the next video, because I want to talk about, and I would love to talk about, this miss right here. This is a mess. I started good, and the last 2 weeks they were horrible to me, especially the last week. It was horrible, and as you can see, I have journals here, so stay tuned to that video. Maybe I'll upload it tomorrow or the or maybe Saturday, but I think it's gonna be a good video, guys. That's gonna be it for today's video. If you enjoyed this video, please leave a like on this video and subscribe to the channel if you are not already yet. Bro, what are you doing? All right, thank you all so much for watching. I will see you in the next one. Peace.